Hello and welcome, dear traders and investors. I'm glad to present you the daily market preview prepared by analysts and experts from fx.co portal. Here we go. Today is April 25 and we're starting from euro-dollar pair and pound-sterling dollar pair. Evangelos Poulakis presents the pivot point levels. Despite consolidation and uncertainty, the bulls have become active again with the opening of a new trading week and are pushing the price up. If the high of the current correction at 1.1076 is updated and the price firmly settles above it, it will open the way to the monthly resistance at 1.1221. If the bullish activity is lost, euro-dollar pair will return to the support of the daily short-term trend, located today at 1.0993, and to the daily consolidation zone. Further, the instrument will carry on with its decline, and the bearish interest will be directed to the monthly medium-term trend at 1.0901. Having bounced off the support zone of the key levels on smaller time frames yesterday, the bulls began the rise and recover of positions. As a result, the current bullish targets are spotted at 1.1076 and 1.1105. The key supports of the smaller time frames today embrace a rather wide zone, providing opportunities for the development of a correction within the range of 1.1021, central pivot level of the day. This will go to 1.0981, weekly long-term trend. The loss of key levels can change the current balance of trading interest again. The more realistic scenario is strengthening bearish sentiment. Yesterday, the bulls managed to close the day above the resistance of the daily short-term trend, 1.2449. Today, they are once again testing the resistance of the first target of the daily goal for the breakout of the Ichimoku cloud, 1.2502. The next important stage for the further rise is the full execution of the goal for the cloud breakout, 1.2580. If the bulls lose the support of the short-term trend, 1.2449, the bears will seek to liquidate the daily golden cross, 1.2400, 1.2361, and 1.2311, and return to the support of the monthly medium-term trend, 1.2302. At the moment, the main advantage on the smaller time frames belongs to the bulls. But pound-dollar pair is in the correction zone and has begun testing the support of the central pivot level of the day, 1.2458. The next downward target is the key level, the weekly long-term trend, 1.2438. Losing key support will change the current balance of the trading interest in favor of strengthening the bearish sentiment. In this case, the intraday supports of the classical pivot levels, 1.2432, 1.2382, and 1.2356 will serve as the next targets for the decline. If, however, the bulls manage to complete the correction and continue the rise bouncing off key resistance and support levels, their attention and interest today within the day will be directed to 1.2508, 1.2534 and 1.2584 resistance of the classical pivot levels. We've got a red hot market on USD CHF pair. Dean Lau presents. The USD CHF chart is currently exhibiting a bearish overall momentum, indicating that the price may potentially continue to drop towards the first support level. The first resistance level is at 0.9006 and may provide potential resistance for the price if it were to rise. This level is an overlap resistance and coincides with the 50% Fibonacci retracement. If the price were to break above the first resistance level, and the next potential resistance level is at 0.9070. This level is also an overlap resistance and coincides with the 78% Fibonacci retracement, making it a strong level for potential resistance. On the other hand, if the price were to drop the first support level, it's located at 0.8860. This level is a multi-swing low support and may provide potential support for the price if it were to drop. The next potential support is at 0.8764, which is also an overlap support and may provide additional support for the price if it were to drop further. And finally, here's Lowry Bailey with USD GPY pair focused. This morning, like in the last 2 days, the price is below the price channel line 134.31. Yesterday, it tried to break through this line upward. On Friday, there was an attempt to break through downward. We don't know where the price will swing for the third time. Even the Marlin oscillator line moves strictly horizontally. However, if the pair crosses yesterday's high of 134.74, it will try to reach the target level of 135.40, and consolidation above it will open the way to 138.38, to the upper line of the price channel. If it crosses Friday low of 133.56, the price will continue to fall to the MACD line around 131.80. On the 4-hour chart, the general outlook is bearish, since the price could not overcome the resistance of the MACD line, and the Marlin oscillator signal line turned down from the zero line. That's all for today. See you online soon. Good luck.